once you receive the funding, it's a great feeling, but then you must act on your conviction, right? You have to put all that previous feedback, as good as it can be from a number of these VCs or whoever it is that you're speaking with, angels, is everyone will have an opinion, but your opinion is the most important out of everything, right? If you are really going into business, if you really have a validation of a business model, the only thing that will drive it is you. So your skin has to be so thick to take on all the opinions, the no's, the maybes, the come back to me's, all the kind of the crap that comes with it, right? And it's upon you to execute past that funding as well, right? So it's a great journey to be in, but you have to stay strong.
Hey guys, Matt Haycox here, and welcome to another episode of the Matt Haycox Show, where I've got two very interesting guests with me today, Philip and Chris from their business at Klink. I'm in Dubai, the guys are in Germany, and it's the first time we've recorded a three-way podcast on this, so feeling very international, very sparkly. I've even got my new Botox, my flat head. So looking forward to making the most of it with these guys. And we're actually talking a little bit before we came online, just to, I guess, so I could learn a bit more about the business, which is crypto-based, savings and prize-based. I understood it because they mentioned the words premium bonds, and as a dinosaur, I've been investing in premium bonds since the age of about 18. But anyone who is younger than me, who isn't from the UK, probably has no idea what I'm talking about. But I'm going to use that as the lead-in to welcome these guys and let them tell us about their product and the business. And we're going to dig deep on all kinds of interesting things like fundraising, crypto in general, raising money in a climate like this, and launching a business in Europe as well. So, guys, welcome to the show.
Thanks for having us on, Matt. Cheers.
So, give us the intro. Tell us all about it and where it began.
Sure. So I'll kick off, Philip. So on a top level, as we introduced ourselves, right? So Klink Finance is a gamified crypto app, basically retail-facing crypto app. What we seek to do as a business is bring prize-linked savings into the crypto world. So you touched upon that with the premium bond scheme, and I will be very happy to present the mechanics of our business and how it works. But probably from a top level, it would be better to describe where myself and Philip came together, how we validated the business. So myself and Phil, I'm Irish, Philip's German. We met each other through the venture network in Berlin late last year. We knew a lot of different people in the venture landscape. So on a top level, when we started to validate Klink, what we sought to do was validate gamification in personal finance. So very much on a top level landscape. So we see gamification so well applied to separate verticals. If we look at language learning applications such as Duolingo, if we look at Babbel, if you look at your Apple Watch that counts your steps, that gamifies the amount of steps you have amongst your friends, what they do is they take on a very good psychology amongst their consumers to form better habits in terms of their actions. So we were very inspired by these types of businesses and these actions. But what we had also noticed was it wasn't that well applied to the personal finance space. So we dug a bit deeper. We had seen some emerging players in the Web2 space across Asia and the US that were really trying to gamify and monetarily reward consumer behavior from taking different savings actions. But ultimately, the business model wasn't very sustainable. So if we looked at the venture landscape last year, a lot of businesses were raising investment on cheap investor capital. The capital markets had cheap liquidity. But what they were doing, like very many consumer fintech applications, was basically spending investor capital for their user acquisition to power rewards, and then hopefully cross-reference secondary products as they develop, which ultimately wasn't very much a different sustainable business model. So myself and Philip basically saw that by powering wider user populations of people, not the crypto natives, the regular people of this world, into holding digital assets and bridging them access to the blockchain economy, somewhere where sustainable yield can be sourced from in terms of the infancy of the space itself, would be that we would be able to create a sustainable business model through prize-linked savings by getting people to participate and holding more and more wealth in digital assets as they develop. So that was the landscape of the business. Maybe Philip, do you want to jump in on your introductions as well?
Yeah, so for me, in the early phases of building Klink, it was also learning a lot about the concept of price linked savings. So for everyone that's not from the UK and doesn't know premium bonds, it's basically a different way to reward positive financial behaviors, to reward savings. And instead of getting a fixed interest amount, you win your interest in the form of prices. So prices are for Klink are between 1 cent up to 1 million US dollar on a weekly basis that you can win just for holding your funds in the application. So instead of earning interest, you win interest. And this again goes back to the psychology part that Chris mentioned of having the feeling that you've won something, that you've earned something, feeling rewarded for this kind of positive financial behavior. So we started building that in January, and we are right now in internal testing and are looking to open our application for users in January next year.
So let me ask you a couple of questions on this thing, because when we talk about premium bonds, it does help it get contextualised very much for me. So when I guess maybe two questions at the same time. When we look at premium bonds, and again, as the boys have said, for anyone who doesn't know premium bonds, it's a prize based saving as opposed to a black and white interest rate based saving. But I guess the key thing is, I forget the exact numbers, but the premium bonds guys basically say that if you have your full allocation invested, I forget what that number is, like 20k or whatever, that you should get an annual return. I mean, last time I checked, let's say 4% or 5%, or whatever the number was. Obviously it's not black and white. It's subject to up and downs, but you should get an average return of X, and you're in it for the chance to win a million or win some big six-figure numbers as well. So I guess using that as the lead-in, my questions to you are: Is it the same with Klink that that people can predict that whilst they may win some big amounts, the average says they are going to actually earn an interest rate of X? And then I guess secondly, what do you do with the money? How do you generate the prize pool? Because I mean, I guess with the premium bonds, they are just government bonds, aren't they? They're invested in government, whatever the securities. I guess that's probably a dirty word nowadays. It was probably more trustworthy 25 years ago when I first started buying premium bonds. But what do you actually do with the money?
Yeah, so I'll probably kick off with the first question in terms of the mechanics of the premium bond scheme. So to kind of reiterate on a few numbers, for the non-UK listeners, there's 140 billion locked in assets under management with the UK premium bond scheme. There's over 19 million participants. I'm Irish. I personally grew up with the scheme myself. Ireland has its own version of it as well. But what we uncovered within our validation is that it's actually very common across the Commonwealth. So across Australia, India, Pakistan, Canada, they all have similar schemes from a governmental level, right? So this business model is pretty well known across many different markets that we seek to enter into over the coming months and years. But in the way in which it works, right? So on a very top level, the premium bond scheme is they accrue all the funds together. The institutional level amount of interest that's earned, so across the 140 billion, whatever that is, they will randomly distribute that interest to users on the form of prizes. So some people will win, but not everybody. So it's almost as what you could see as an alternative savings mechanism. We're very much of the opinion, and we expect to say to our users that we don't expect people's life savings. You should not put your life savings into one product ever. That's general money advice, right? But ultimately, that we see as an alternative savings portfolio, let's say, for your fiat or your crypto assets in our case, right? But if we look at our business model, right, we work in very much the same manner, right? So we utilize with our digital assets, third-party custody solutions, a platform called Fireblocks. So in a very simple term, you can see them as a crypto bank, right? A B2B crypto bank. They're highly secure, MPC securities, etc. But what we do, similar to the premium bond scheme, is that we would aggregate it across a number of different yield sources. So across different DeFi protocols, some market neutral strategies and arbitrage as an institutional level. But what we would do then is we would, in the exact same mannerism on that institutional level of funds that are held, we would distribute it at random back to users on a week-on-week basis. So that's kind of hitting on that matrix structure that Philip has mentioned. What I will say about the premium bond scheme, I think you mentioned 4%. It was 1.2% for many years.
Is that what
That
it
was
was?
yeah, yeah. So in the dinosaur worlds, as you mentioned, right, it was 1.2%. I believe in this very, very high interest rate environment. They've pushed to 2%. So we're refining our model now. Everything we want to do is to ensure safety, right? I think a lot of the mistakes that players made out there in the crypto world is they were offering 12, 16% APY. We don't need to tell you that is not sustainable, right? So we aim for a couple of percent ourselves, ensuring that the funds are safe at all points, but obviously distributing the majority of that back to users to ensure user engagement, retention of our user bases, and obviously keeping things fun. So transparency is
And,
going to be
and
very important to us. We want to present.
tell
Uh,
me,
yeah, go ahead.
do you take do you give back 100% of the money? Like, is any of it distributed either almost like as an interest rate or as some kind of management clip to you guys, or does 100% of all the returns get distributed? It's just that it's distributed in an uneven basis.
Do you want to take that, Phil?
Yeah, for us initially, it's taking also a small management fee on this on the generated interest, and then when it comes to who wins what, we for us it was really important to have also this kind of average interest that everyone can earn. So just with having 25 US dollars in our application, it's already the chances 40% that you win something on a weekly basis. So the more you hold, the longer you hold, you will definitely earn interest. So it's not everyone waiting for that big jackpot. It's having frequent interest payouts while also having the chance to win big. And about those larger prices, so we offer two top prices as well on a weekly basis. The top price being 1 million US dollar and the second price being 100,000 US dollars, they are covered by an insurance partner. So, especially during the course of this year, it's all about ensuring trust and being transparent. And this is also why we decided it's not upon us to select who earns what and to cover those large prices, but we have a third party solution in London, in the UK, who does the draw of who gets what and also who covers the larger prices as an insurance partner.
Okay. And you can only invest using digital assets. And is that any digital assets or it's USDT?
Yep. So, of course, in the course of this year, right, it's again ensuring safety. Uh, Digital assets, USDC is the main asset that we hold in this MVP phase. So you can almost see as this product, you would have remembered in the earlier form of the podcast, it was around bringing gamification into personal finance. We see this first product as a earned product, so a savings product that you would see on many other kind of crypto platforms, let's say, right? So we use USDC for a number of reasons. First of all, we're a crypto platform. We want to engage that people will hold and grow their wealth in digital assets as we build out our products and services moving forward. It obviously has a lot more easy access in terms of earning yield, in terms of the blockchain economy. So it's a lot more liquid in terms of our operations. But what we also wanted to test, Matt, is we've number of user demographics, right? So we would hope to think that maybe you're a customer, right? You've integrated with premium bonds in your life, but you're also holding digital assets so that you would put some allocation to our platform. So we would see you in the kind of crypto native, crypto curious type user profile, right? That can easily send from their Binance accounts or from their MetaMask, just ease of use into the platform without any volatility on the token, let's say, right, in terms of the assets that we're using. But if we look at the wider user populations of people, so something in nature that myself and Philip are very bullish on in a bear or a bull cycle is that digital assets are the future, right? But there are still many people in the UK, Europe, and globally that might have heard of crypto. So 83% of people in the UK know what crypto is, but I believe only 7 to 10% of people have adopted and holding some form of wealth in it, right? So what our real mission in this, with this first product, let's say, is that people will take their first step into holding some form of digital token, digital currency, but that it's still pegged intrinsically to a fiat currency, to the dollar, right? Which is something that they're used to. They can start coming to grips with basically what it is. We will educate them in terms of what the holding is, what we do with the funds, etc., and obviously be able to test out the other 93% of people that aren't holding crypto yet in the UK, and wider adoption. So this feeds into our first product. We do plan, of course, then as we build into a secondary service platform, is that we would allocate Bitcoin, Ethereum, even in terms of rewards and stablecoin. Some people, could you imagine you say to your friend in the pub, I don't want to use crypto, but it's you can use our platform, hold USDC, and then earn yield in a token of your choice where you don't lose your principal. But ultimately, that in the second forms of our product is that we will be bringing in those tokens, educating people, but of course, starting with that first step in something that's not volatile, but still digitized and on chain.
So, I mean, look, we talk about trust. We talk about more and more people coming into the crypto world. But obviously, we're recording this in the beginning of December, not long after the wake of the FTX scandal and the crash in general. I mean, how has that been affecting you guys? Where do you see that featuring in your business model?
For us, building during the course of this year, so we started earlier this year, and then also the crash of the Terra Luna ecosystem happened very, very early in the year. So we are basically building in a year of crisis in the crypto space. But it's a very huge opportunity for us because we see all those failures in the space and can turn it into our advantage. So what we really learned during the course of this year is how investor behavior changes. So when you looked at VCs investing in 2021, we had 10 billion a quarter flowing into the crypto space, into different startups, and now it's around 20% of that a quarter. So the interest of institutional investors in this space decreased, while we see a lot of good things happen as well. So we see a lot of people building more sustainable solutions right now. So when you look at those big failures of now, for example, FTX, or players before also with BlockFi going bankrupt, all those players in the market, it really hurt the trust of the consumer. But it also is the kickoff of a new wave of more sustainable products that we are currently building. So we meet a lot of great people in the space who really stand for transparency, also in the CeFi space, who want to ensure trust. So for us, it's a big opportunity, but it was also a challenging time to find institutional investors who back us on our mission during the course of this year.
I mean, I think it's a tough one. A tough conversation. The whole trust issue with crypto, isn't it? Because I guess yes, there's been some pretty high profile scandals and scams of late. Well, not just of late. Over the last 2, 3, 4 years. I mean, since the beginning of crypto, since the beginning of NFTs. But the reality is, it's nothing that doesn't go on in the rest of the world anyway. I mean, every day, or certainly every week, we'll hear about a fraudulent chief executive, or a financial product that didn't really exist, or once a decade, we might get a big Bernie Madoff style story, and I think people are. I'm not going to use the words accepting, because obviously these are horrendous situations, but people are more accepting of that in the day to day, and just blame the character themselves and say, Bernie Madoff's a bastard, or this CEO is a criminal, because they kind of are blind to the fact that it's denominated in sterling, or denominated in US dollars, or whatever it may be, because that is just the currency of the day. But I think when people have dislike for the crypto industry anyway, or lack of understanding, it just helps them hammer home their narrative that crypto for scams, and it's no different to what's going on every day in every country in the world in their local currencies. It's just that it doesn't get the get the high profile conversations necessarily, for whatever reason.
Completely agreed. But I think if you look at the differences between the crypto world and the Web 2, the banking systems, is that there's standards in place in the banking system now, right? So there's a wave of legislation coming now. We've looked at this for quite a long time, right? So myself and Philip are crypto natives. We had validated businesses prior to Klink, right? But always there was that narrative from legislators, right? Is that they're going to regulate crypto with these events happening now in this next cycle, what has happened in this current cycle, right? The end of the bull market is that ultimately the treasuries of these businesses, CFI or DeFi or somewhere in the middle, is that there needs to be some form of legislative landscape in place that they have to adhere to. There has to be whistleblowers, proof of reserves, proof of liabilities, regular auditing in terms of the actual way in which they're operating as a business. To our understanding, it seems that Sam Bankman-Fried, all of these guys, right? They were just playing around with the funds, right? So there was no standards in place, there was no intermediary, no audit. So we expect pretty soon that these standards will come into place, right? Which will minimize it. It will happen again. But at least I think on your conversation, there can't be that dialogue that, it's the Wild West, because, it acts in the same principles as the traditional banking world does. There's a large framework coming through in Europe at the moment. It's called MiCAs. It's the Management and Crypto Assets Framework. A lot of the articles within it mirror somewhat of the traditional banking standards as well, right? So it's just basically best practices, but in terms of the institutions and how they would actually act with the user funds and their own treasuries as they move forward as a business.
But tell me, I mean, whilst undoubtedly everything you've just talked about there, has to be a good thing, in terms of transparency and safety and degrees of regulation. How much regulation can we bring into the business, i.e., the crypto industry, without it then ultimately, I guess, killing the decentralization that crypto
Yeah.
actually stands for?
It's a good question, but I think what's forming now is there are two worlds, right? There are worlds of people who will utilize services, protocols, non-custodial wallets in a manner that is completely decentralized. But there are also, as we've mentioned, still a mass adoption of people that don't have the literacy to understand and control decentralization, right? So if we look at that bracket of people, which is the majority of users, right? So that those numbers that I'd mentioned across the UK, and the adoption rates, etc., they are still used to using fintech products. They are still used to having some form of a customer service. They do not feel confident in terms of doing a transaction on chain, ensuring that it has been validated across on-chain hashes, etc. So in terms of actually bridging real access to decentralization, I feel there needs to be a world whereby there's safety for those newcomers whilst they move and advance into a world of decentralization as they become more mature, right? So we always describe it. We speak to many of our friends, right, who are not crypto natives, and we try to explain what we do. With the prize link savings mechanism, it always kind of registers with them. They can understand it from a traditional form on how it works and operates. But if we explain the depths of decentralization, they're lost, right? So ultimately, there's a big gap to fill for that user bracket of people. We feel those are the people that we seek to serve with Klink initially, get their first steps into crypto, give them a level of safety and support. We have insurances in terms of the custody, the Fireblocks softwares that we use, etc. But also let the decentralized world flourish in its decentralized nature, right? No regulation should come through decentralization, but in terms of being that medium, in terms of onboarding people to their first steps and creating some form of assurances. Unfortunately, the institutions that have offered these types of services of the last years now have gone under, right? They did not operate in the best practices. So they should be regulated because they have an onus on their user bases to act in the best practices for what they're actually educating their users into.
So when do you actually go live?
We are currently in internal testing of our product, so the MVP is completely built, and we are right now in the test net. And once tests are completed from our side, we are looking to open our closed beta early next year. So that's our current timeline.
So let's move away from crypto and talk about the world of business, and I guess what hurdles you've had to jump through to get this far. I mean, you talked at the beginning of the podcast about raising money from institutional funds, in the current climate, and the toughness of that. I mean, how have you funded the business, and how has that fundraising journey looked?
For us, the early phase of looking at gamification in the personal finance space, what you need is an early believer. So we found this early believer actually in Italy. So we were in the early phases of our product, supported by a venture studio in Milan, in Italy. So they gave us the first ticket to support us financially, but also supported us with a team of developers to build on this initial vision that Chris and I had, to build a prototype to show that there is room for this product in the market. And with this initial prototype that we had, we started going out in the world and talked to bigger institutional funds. So by us being based in Europe, we spoke to a lot of different European funds. And what we saw is that interest in the Web3 space is there. So a lot of people have it on their website, want to talk with founders in this space. But then actually, we didn't see a lot of investments being made of European funds in this space. So for us, in the end, where we found our backers is in Asia and the US. So we now raised our pre-seed round just in August this year from three institutional funds in Singapore and one crypto hedge fund in New York. And what we've seen is not just the institutional interest in Asia in this space, but also from a banking perspective. So one of the investors that we onboarded in this early phase is the third largest bank in Southeast Asia. And they also see a lot of potential in acquiring customers and incentivizing users with gamification as a tool, also for the traditional banking space, not just looking at the crypto space.
I mean, I don't know how much is public knowledge or how much is confidential, but I mean, are you able to say how much you raised for that pre-seed round?
Yes, we raised 500,000 for this early phase. So why we did that and what we did with it is we already knew what we need. So with this initial pre-seed round, we built our core team. So we are now 7 people working on the product. We have 3 developers right now. We have 2 people who come from the crypto and fintech space working on our go-to-market strategy, marketing, and then Chris and me, who basically as founders have to jump in all different areas that need to be tackled. But for an early stage, for everyone who wants to build something in this space, the early phases of raising funding and then getting some traction is really validating all the hypotheses that you've initially pitched to investors. Because initially you go out, have this big vision, and have to find someone who believes a bit in the vision, but more believes in you as a person. So who just thinks these guys will make it work no matter what. Because most of the idea is how you initially run around in circles to investors, speak about your vision. It will change anyway, but you as a founder won't change. So the same applies to the early hiring of the team. So it's important to find people who you personally get along with very well and to share the bigger vision, not just for the prototype that you're building, but for the long-term feature roadmap of what you want to tackle with your product.
I mean, I always tell business owners and founders in particular that I believe that raising funds is the single most difficult activity you will ever have to do in the course of building and running a business. And
Yeah.
I ultimately say that really there's no magic trick. It's a constant journey of networking, growing your networking, and kissing a lot of frogs until you find a prince, and ultimately a prince that you may never ever find. But I mean, am I right in that story with you guys? I mean, how long were you raising funds for? How many frogs did you have to kiss?
Yeah, I wouldn't want to give away how many frogs we kissed, Matt, right? But there were plenty for sure. We did many things, right? So we tried to raise a stable coin bond business, right? As Terra Luna was going down, the crypto markets were going down. There was like, complete despair and unbelief. So around February of this year, we felt there were many Web2 funds that were kind of putting their toes into crypto, right? They were getting bullish in nature. They hadn't done investments before, but that investor interest completely just got rug pulled by the time the turbulence started to happen. So we were born out of a venture builder in Milan. So that's where we initially validated the business model, got our early interest in terms of understanding the scope of what we were doing. But we touched some Italian VCs. I predominantly looked at a lot of UK VCs, etc. Very good interest in the market, right? Ultimately, we actually strategically took a break once the markets became turbulent, right? So we really honed in on our business model, what it is that we were trying to build, bringing context to why it would work, and obviously all the benefits it can bring. But we took a pretty heightened decision then to move ourselves towards Asia, right? So within the crypto space of the markets, right? If you step foot into Singapore, myself and Philip recently attended Token 2049. It's quite a major crypto event in Singapore. The Asian markets see that cryptocurrencies are the future of money, right? There's no debate about that. Around the MENA regions, the UAE, they also have, I feel, that kind of narrative or that opinion that ultimately the future of money will come through on-chain technology, whatever way in which you want to look at it. But we felt that Europe still wasn't really there yet in a lot of our conversations. A lot of the times as well within the European landscape, there's a narrative of a lot of traction that's needed before a seed investment, right? They want to see good numbers. And of course, that's completely reasonable of a fund. But in the US markets, and Asia again, they have more of a risk on attitude where you see it a lot of the time, right? They back founders a lot of the time more so and the business thesis before going into market. So really being in the earlier phases based on basically bullishness of a number of different factors as opposed to seeing cold hard traction, which can be a lot of the time in the European landscape. So there's a lot of lessons learned. If there's any founders listening out there, it's just your conviction has to be so strong. You'll be told no hundreds of times, right? Myself and Philip have been in venture development for a number of years prior to this business. We've seen other businesses win and fail, but your conviction has to just keep running and running and running as you kiss all those frogs, right? But on the other side of it, what I think is very important to note is, once you receive the funding, it's a great feeling, but then you must act on your conviction, right? It's that, you have to put all that previous feedback, as good as it can be from a number of these VCs or whoever it is that you're speaking with, angels, is everyone will have an opinion, but your opinion is the most important out of everything, right? If you are really going into business, if you really have a validation of a business model, the only thing that will drive it is you. So your skin has to be so thick to take on all the opinions and the no's, the maybes, the come back to me's, all the kind of the crap that comes with it, right? And it's upon you to execute past that funding as well, right? So it's a great journey to be in, but you have to stay strong.
I mean, is your product and your business model the same now that it was when you started the fundraising journey, or despite keeping that thick skin, did you find that any of the kind of no's and knockbacks and comments along the way actually did have the seeds of decent ideas in there that helped you helped you hone your product, and maybe ultimately is what made you raise the money from the people you raised it from?
Yeah, definitely. I mean, for us, as we started, we looked at gamification in the personal finance space without looking at any particular currency or looking at any particular technology that we wanted to use. So, and in the very early phase, we just looked at the space. And then we started to refine our model and find this perfect place for us to be somewhere in the mix of personal finance. Because how Chris and I see the future is not there is one world for fiat currency, there's one world for crypto, but it's all personal finance based. So we see it interlocked at some point. But also looking at the crypto space, there's different depths that you can build a product. So you can be fully decentralized. You can be a centralized business that basically operates like a normal fintech application, or you can be somewhere in between with the CDFI space where you have the fintech front, where you have a centralized entity giving access to the crypto space, to all the DeFi opportunities out there. And all the conversations that we had during fundraising, all the different people who gave feedback, it's very important to distinguish between helpful feedback and just criticism. And for us, it changed the model a lot, and we identified the CDFI path as the way to move forward for us. So basically, how we see the next wave of retail investors onboarding to the crypto space is not in a fully decentralized manner. People still want to have their customer support. They want to log in with their email address. They want to have a number on the website that they can call if they have any struggles. It's not being fully decentralized for this new mass market adoption that's on the horizon. So overall, the course of fundraising, Chris and I really shaped the model into the way it is right now and how we are bringing it to market now.
Well, listen, guys, it's been a pleasure having you here to talk to, and I hope you're going to make me one of your beta testers, and I will give you a sprinkling of my USD, and bring myself into the 21st century from my premium bond days. I mean, do you have? I guess is somewhere where the guys listening and watching can find you? Is there somewhere they can register to hear more and hopefully become on the beta list themselves?
Yes, please.
Sure. Yeah. So, sorry. Yeah. So we're in a phase of testing now as of next week, right? We have got a number of our signups, so we're at 10,000 strong now over the past year on our sign up list. What we want to do is incentivize early adoption, right? So within the actual platform, we'll give a number of different rewards for users. You can find out more about that reward scheme from our website, klinkfinance.com. We would love to speak with people, qualitative and quantitative, always moving forward, right? So if you're a listener of this podcast, myself and Philip are available on LinkedIn, and we're always happy to discuss and hear topics of interest from any party, right? Whether it be investment-led, user-led, or anything in the middle. So looking forward to all thoughts and conversations moving forward with potential users.
Perfect, guys. Well, I'm very much looking forward to seeing the journey, and I hope I get to win big with you as well, guys. At home, I hope you enjoyed listening to that, watching that. As always, I'm the Matt Haycox. That's TheMattHaycox on all things social. If you've watched this on the YouTube version, you can get an audio version on iTunes or Spotify or wherever it is you listen to your podcasts. If you've been listening to the audio versions and you've never seen my pretty face, head on over to YouTube. Where all of these audio ones are in video form too. And until the next time, I will say thank you for watching, thank you for listening, and thank you, Chris and Phil, for being a guest.
Thank you, Matt. Cheers.